Hey, what is up, YouTube? I'm going to actually show you guys anybody that is just trying to get any type of no PG, no hard pull business credit. This video is for you. Now, be warned, this isn't for those that are trying to get, say you have a brand new business you just started. These methods won't probably work for you because a lot of these fintechs, they base their decision strictly on your business credit profile, typically just Experian, and then a combination of either your personal credit with a blend of your banking activity. So these methods are only going to really work for those that have at least 2 months of banking history. But if you don't have 2 months of banking history, you don't have gross revenue coming in, then you need to start doing that. Say you do Lyft or Uber on the side. If you already have your business checking account, start funneling that into your business account. You just want to show some type of gross deposits coming in. But any questions, please put it in the comment section. But I'll show you 17 different fintechs, and all my students have got approved with all of these. I'm not saying every student got approvals at each and every one, but like say one student got 5 or 6 different ones, and so I've experience with all of them, all right? And I have a lot of the cards here of these particular fintechs, so I can actually show you. There's a couple that are fairly new that I have not actually personally applied for. As you guys can see, all these cards, the American Express Ethereum Black card, my black card. But that shouldn't be a goal for anybody because it's not that great of a card, but I've been through it all. This video is just basically breaking down, if you know how to leverage these fintechs, you can get millions. And when I say millions, you really can. The downside about a lot of these fintechs, though, is the repayment terms is typically like a charge card, just like say American Express, Platinum card, similar to like that. Or say the American Express Plum card, you have 30 to 60 days. Some of them do 90 days, and there's one or two that will actually go out to 6 months. But most of them typically are going to be 30 or 60 days that you have to pay the balance in full. But if you have 5 or 10 different fintechs that you got approved for, and when I say fintechs, I mean financial technology companies. But if you have several of those approvals, let's just use this as an example. Say you have Ramp, right? Okay. You got approved for 50,000 with Ramp. You got approved 50,000 with Expensify. So you just have two, and you got 50,000 for each one. And I'm just using that as a round number. Essentially, how these fintechs are beneficial for you is you can liquidate 50,000. And a lot of my students, my one-on-one students will say, but Josh, you have to pay it back in 30 days, so that's not really helpful as much, especially if you're buying inventory. It depends what type of business you're in. But how they can be very beneficial is you get Ramp, 50,000, and then you got Expensify, 50,000. So after 30 or 60, and Ramp actually has up 90 days, but when it comes time for that to be due, all you would do is just liquidate your Expensify, use Expensify or the bill pay to pay back Ramp. All right, so it's kind of like liquidating, stacking, whatever you want to call it. Each one of these, they're going to have different requirements. So like Ramp, they tend to look more at your banking balance more than anything, not so much your personal credit at all. And they want to see statement history of 90 days. But then Expensify, on the other hand, you could actually be a new business, only been in business for 1 to 2 months, and get approved. I have a student that literally got a 205,000 limit. Expensify is dynamic, meaning that it's going to fluctuate. So you could say get a $100,000 approval today, and then 4 or 5 days later, you could log into your Expensify and your limit could have went up or down. So it's dynamic. About once a week, they're going to do a ping on Plaid into your bank account, and then they're going to base it on what's in your business bank account. But not all these fintechs are equally the same. Some of them are dynamic, meaning it fluctuates, your limit will. And then, say, Ramp doesn't really fluctuate that much. If they approve you for 35,000, it's going to stay that 35,000. It may move a little bit, but what they approve you for, it's pretty much what it's going to stay. And all of these fintechs, they're going to stop fluctuating the dynamic limits part once you start having that payment history. So if you got approved, you're with them for 90 days, no problems on the repayment, then they're not going to be pinging and checking your accounts as much. They just want to see that payment history. So the longer you build up that history with them, like I have one student, she has 36,000 approved with Ramp. This one. She has over like 200,000 in her business bank account, but she's had that account since November last year. She's never used it one time. And at that time when she applied, she only had like 30,000 in. So I want to do a limit increase. They won't let you do a limit increase because there's no payment history. But had she applied with, say, 200,000 in her bank account, she probably would have got a starting limit of 250,000. So each one of these, they will give you anywhere from 50 to 150% of what's in your business bank account. But again, this is where my one-on-one business credit mentorship comes in, because anybody that's on my mentorship, I strategically tell them and time it when to apply. So if you get 1 or 2 approvals, even if you're somewhat pre-revenue, you could actually do this. Get a Fuelman MasterCard, right? Let me show you here the difference on these two. So let's see if the camera angle can show. So you can see these are both Fuelman, right? Both Fuelman MasterCard. Same account. But you guys see how it says fleet and multi, all right? So when you first get an account with Fuelman Fleet Core, they're going to give you the fleet, meaning it can only be used for gas and gas only. But I teach my students that are my mentorship how to bypass this and actually liquidate even if it's just fleet. But to get offered the multi meaning you can use it for anything. There's no MCC code restrictions at all. That takes about 90 to 120 days to get this unlocked. And you can do the same thing with the Speedway Super Fleet. You can see here I have Speedway Super Fleet. See, it's the same thing. And even though it's 7-Eleven now, but I got them unlocked. So they don't offer this right away. But for any of those that are in, say, pre-revenue, and the only reason I'm even bringing this part up is for the viewers right now that may not have revenue coming in. So you're like, Josh, this isn't really helpful for me. Well, it takes time to get into these fintechs, but FleetCore, no problem. You just need to have some pretty good Experian business credit. What we would do, and you don't necessarily have to do the mentorship, you could just watch my past videos, but you build up solid business credit on Experian. Who cares about Dun & Bradstreet? Don't focus on the scores, but you build up solid business credit and a good account mix and make sure all the rich filmographic data is correct on your files. So on your Experian, your bin file, just like this one too. This is one of my students, but you want to have all this be in green. You can see how it says recommended credit limit of 1,000. I'm showing you guys this because I'm actually an underwriter with one of my other companies, so I have access to this, and I'll actually pull all this for any of my one-on-one business credit mentorship students. But anyway, sorry, I don't want to ramble too much. Let me just go through real quick how you could actually get to the point of getting these fintechs if you're pre-revenue or you don't have a whole lot of revenue. You get approved for a Fuelman regular fleet card, MasterCard, right? If you're in my mentorship program, I'm going to show you how to liquidate it. Say they only gave you a $5,000 limit. We're going to liquidate that, pull that 5,000 off, or like 4,900, and then we're going to actually put that into the business checking account from, say, the Blue Vine to your main Chase account. And you're going to do it as a bank wire, so it actually shows like a gross business revenue instead of just doing an ACH transfer. That's like they know you're just moving money around. But when you do gross deposits by a bank wire, it's looked at the same as if it's you have a client that's paying. So it looks way better on that. So say you have that 5,000 in your business checking, you have 30, 45 days to pay that back. And then say once you're in with FleetCor, the underwriter of Fuelman, then we'll go after, say, Speedway Superfleet. Same thing, liquidate that. And typically after you get one, the second card that they have, whether it be BP or 7-Eleven, it's typically going to be a much higher limit. And you can do it literally 2 weeks after getting the Fuelman. So you would likely get, say, 10,000 with the second FleetCor card. So then you're going to liquidate that and do the same thing. Now your business checking account has around 15,000. Then you're going to go apply for a divvy bill. Okay. Sorry if this is confusing. If you're interested in my one-on-one business credit mentorship, I walk you through all this step by step. But then you would get this card, right? And divvy actually approves even if you have small activity. You could actually have almost no activity as long as you have good personal credit and some experienced business credit, you could actually get approved. Or vice versa, you could have, say, not good personal credit, but you have some gross deposits coming in and some business credit on Experian, then they could also approve you. But I'm not going to get into all that right now. The whole point is okay, Bill Divvy is one of the easiest fintechs to get approved for, and they actually have a bill pay. So you can actually use your credit line to do bill pay, and that's another way to liquidate that credit line if you don't want to just pull it off, right? So they're going to approve based on those gas cards that doing that method. Again, you don't have to do this method, but this is for people that are pre-revenue, how you get into getting into the fintechs and how you can end up turning 10,000 into 500,000 or $1 million in fintech approvals. It's not an overnight process, but it very well easily could be done. If you're pre-revenue, maybe 6 months, 9 months, you could have over $1 million if you stack and do it right strategically. But if you already have revenue coming in, it's very easy. And some of my students literally get 400,000 or 500,000 in the first week or two of the mentorship. Everybody's situation is different. But basically, if you have 10 different fintech approvals and they give you 50,000 each, and I'm just using that as a round number, but if you do have, that's 500,000. So essentially, you never want to use more than, typically going to say 40, 50% of what you have available to you. So say you have 500,000 available to you across all the fintechs, whatever fintechs you have. So I wouldn't personally use more than 200 to 220,000 of the 500,000 available to me. Why? Because you never know with business and what can happen. All this is no PG, but you don't want to be late with any of them. You can grow the relationship and get limit increases quickly as well. So why I say never use more than about 40, 50% is because if worse comes to worse, in business, say you bought Amazon FBA products and something happened. You just never know in business what could happen. You could expect to have money coming in from that initial investment, but if it doesn't or something comes up, then at least you have that buffer money. You would liquidate 4 cards to pay back a month, 2 months or 3 months later, you're going to use the other cards to pay these back, if that makes sense. Now, do you have to do this? No, absolutely not. I'm just saying this is one way that you can actually get a lot of funding. And some people say, Josh, why you have to go through all that hassle and stuff? It's really not as complex as I'm making out to be. But in my client portal, I break everything down case by case basis, depending on what your situation is, what your short and long term goals are, right? A lot of viewers and people that call me for a phone consultation, they're like, why go through that? Can't we just go get a loan? Yeah, you could go get a merchant cash advance. The problem with all these business loans is they're going to report a UCC filing. And UCC filings they're not bad, but they're not great. Let's see here. Let me see if I can show you. So like on here, it would say like a corporate record, right? This is in Ohio. You're going to see like obviously the status and stuff, but under additional corporate records, they're going to see like a UCC filing. Any merchant cash advance, like 99% of the time, doesn't matter if it's 5,000 or 500,000, they almost instantly file a UCC filing. And that just legal process, just in case something happens or whatever, they're first in line to get paid back if you've filed a structured bankruptcy or something. That's why also merchant cash advances are not no PG. They may not pull your personal credit or a hard pull, but pretty much all merchant cash advances are going to be personally guaranteed. So they can still come after you personally. What's nice about all these fintechs and gas cards is they're all no PG. I'm not saying that means use them, abuse them, and not pay them back, because if you do that, you're just ruining it for everybody else. That's why there's less and less no PG credit lines and credit options out there than there was, say, 5 years ago. But I guess my point is the sky's the limit with these fintechs. So I have Carrot, but that's really made for based on content creator. But I think that's 12,000 or so on that. But I got Capital on tap. This one is actually a fintech that it's blended based on your Experian business and your Experian personal FICO 8. But you could have an 800 FICO score and still get denied for it. They don't do a hard pull, but they want to see some activity on your Experian business. So this is not a card you just want to get out of the gate. This one started at 14,000 limit, but I got it up now, I think 18,000. But some of my other students, they've got much higher. I've had the card for quite some time, almost 5 years now when they first launched. I was one of the first to put a video out about them. But what's nice about Capital on Tap is, say they gave you a limit of 10,000. You don't have to pay that all back like a charge card. You just have to pay a minimum of 10%. So if you use 10,000 out of that 10,000 limit, then you just need to pay back 1,000, and you can basically revolve the other 90%. So it's a minimum repayment of 10% per month. So if you have 10 or 15 solid fintech cards, use those properly and strategically to put you in a position to build strong Experian business credit. So then you can go and get an SBA loan. SBA loans are the best, 3-4%, and you have anywhere from 5 to 15 years to repay. You can't really beat that. But a lot of the merchant cash advances that people always talk about, oh, just go get a business loan. Pretty much all those are going to be either daily or weekly draws out of your business bank account. And that looks bad too. So you could get some of these scrappy, they're easy to get, the merchant cash advances, but the fees are outrageous. Like one of my students took 100,000 and has to pay back 140,000. It's like drowning in that. It's like it ate up all your profit. So like in her case, that's why she joined the mentorship. And just like other students, they have put their business expenses on personal credit cards. And now their personal credit score is, it's nothing derogatory, but it's down to say 600 because, and they had almost to 800, but they're drowning in all that high utilization and nearly maxed out. And then every month they're paying $2,000-3,000 just to revolve, just in the finance fees. It's like one of the students said, just for her to pay back, it's one card. It wasn't even that high amount, to 7,000, but it would take, if you pay the minimum amount, until 2037. So it's like you can avoid all that and not have to pay these fees if you just do things strategically and get these fintechs. So anyways, but I'm just going to go through some other fintechs that you guys probably don't know about. Expensify is good, but it can be confusing on how to apply. Each one are going to have different kind of requirements. So that's why some of my students, they could have 60,000 in their business bank account, but they're only doing maybe 5,000 a month or 8,000 a month. So you move money around, do it strategically, and then that's when I tell you, based on what's going on in your situation, that's when I'm going to tell you which one to apply for. We're going to apply for all of them at some point of time, but that's why my mentorship ranges anywhere from 12 weeks to 52 weeks, depending on what you sign up for, what plan, what your short and long-term goals are. If you, like I have 30-40% of my students, they're into real estate investing. So you need a lot of money for that. So that's not something that we can do just quickly in a matter of a couple of weeks. Unless you already have great personal credit, great business credit already built up, and you have great gross revenue coming in, then yeah, I have one student that got 890,000 in like the first 3 weeks of the mentorship. But that's not the norm, so don't think that's like super common. But anyways, I'll just speed through this. So you got Ramp, it's been around. Expensify, so that's Expensify here, okay? And all these work just like regular either credit cards or charge cards. And then you got Revenued. Revenued's a little different. They can be expensive, but they have a flex line and an actual card. So you can use it just like a regular card, or you can actually just draw. If they approve you for, say, 150,000, you can actually take that 150,000 and they'll do ACH right into your bank account. But then the repayment with revenue, not all, but if you take the lump sum going right to your bank account and you don't use it just like a normal card, but if you just actually take the whole line, the line of credit, then the repayment is going to be a weekly repayment draw over a 6-month repayment period. But each one's going to be different too, based on what they approve you for. I've seen some of my students only get approved for the revenued card and not the flex line. Flex line basically means you have the option to, if they approve you for 100,000, you can pull that whole 100,000 and you don't have to try to liquidate or figure out how to liquidate the cards. They'll just put it right into your bank account. However, if you do it that way, it gets more expensive. Versus if you use the card and liquidate it through certain strategic methods or doing bill pay, then it's only about 3% in fees. And some of them, they'll give you 1.5% cash back. So that merchant processing fee of 3%, you can counterbalance that. So it's only about 1.5%. So Revenued's one option too. And then the next one is PEX. PEX has, I've seen literally not just my students, but some of my viewers, they get approved for as low as $500. The only thing bad about PEX is they don't give super high limits. I think the highest I've seen is like 28,000 with one of my students. I don't even have the card, I haven't applied for it because they're fairly new as well. But this, again, this is no PG. And for those that say you don't have business credit or you don't have revenue coming in, so they actually have two different types of cards. So if you don't qualify for their credit card, then you can get the prepaid card, start with that, and then get basically graduated to the line of credit card. They have three different cards here. You can get up to 2 million, they're saying that 2 million is their limit, but I haven't seen more than like 28,000. So and that's the credit expense. But if you don't qualify for the credit expense, you can get the prepaid. And I would do that because that's building up that interbanking relationship that I always talk about. And you guys, anybody that's going to apply for any of these, if you're not interested in my mentorship, that's fine. If you want to go and directly apply for any of these, email me support@joshvanhorn.com, because most of these you're going to have better odds using my link. Yeah, they give little commission if you get approved. They give a little commission to me. But a lot of these, they'll give you actually a statement credit using my link because I have a direct relationship with these underwriters. Or I don't say all, but most. Which one was it? Say the Motive card, you're going to get a $500 statement on that. So if you get approved, you're going to get $500. It doesn't matter if they only approve you for, say, 1,000. You'll get $500 statement credit after 30 days of using the card. It's like a bonus, sign-up bonus, basically. So email me whatever one you're interested in applying for, and then I'll send you the link. I might get all the links put in below. Some of them you have to do an actual invite, like Row. You have to be invited. I have an account with Row, but you actually have to be invited. So if I can invite you, I just need your email address. So then you have CorePay. CorePay is actually the same underwriter as all these fleet cards, the Fleet Core, same underwriter. Here's my CorePay card. It's just a regular MasterCard. What's good about CorePay though is you do get like 1.5% statement credit. That helps. And you can actually do bill pay with it. Say you have an invoice or you want to pay your rent or whatever it is, whatever the cost is, or you owe somebody for materials or buying a vehicle, whatever it may be. You can actually just create the invoice, and then under the payment section, you're going to click on the drop down that you want to use your CorePay card to pay for that bill. And then you're not going to be paying the crazy fees because that's included with it. So that's just one other way you can strategically liquidate these cards. Some of them you can use Plastique or Melio, but you have to do it right because some of them will get flagged. The underwriters don't care. It's just these strategic methods. You have to do them right and don't just kind of go crazy instantly with it. You got to build up that account history a little bit. Not with the underwriters. Underwriters don't care on how you use the credit lines. They make money off the interchange fee, so they want you to use it. The strategic methods on how to liquidate them, that's where you have to be careful though. That's why I said in my mentorship, depending on what students get approved for what and what they have going on, that's how I kind of gauge, okay, we're going to use Plastique or we're going to use Melio or we're going to do bill pay for this or use a processing for it. So CorePay, my CorePay is actually 54,000 limit, if I'm not mistaken. I bought a house using this card and the other gas cards back in 2021, 2022. I bought the 3 rehab duplexes in Ohio. Still have those on Section 8. But basically liquidated gas cards and CorePay card to buy the houses, and they were cheap, they're only 20, 30,000 each, and they needed rehabbed and stuff. But liquidated 3 cards to get the assets, and then I actually have the titles and my name and everything, so that's an asset right there. That's going to help you leverage, go to the bank if you want to get a traditional loan or whatever. But then people say, okay, so how did you pay it back though? Then I had the other gas cards. I liquidated the other gas cards to pay them back. And essentially I used their own money to pay them back with their own money. Did it cost me? Yeah. I had to pay about 2%, 3%, depending on which one, because some of them give the 1.5% or the 1% cashback statement credit. So it's all strategic. And this may sound all complex, but once you get the hang of it with 2 or 3 fintechs and how I'm teaching you on the mentorship, then riding a bike. Once you do it once, you're not going to forget how to do it and stuff. All it takes is just a Google spreadsheet or Excel spreadsheet. Keep track of the fintechs that you got approved for. Keep track of the due dates. And then you're going to just use. So if you got 10 different fintech approvals and their amounts are all going to be ranged, they're not going to be all the same amount. But you're going to have a column and you're going to put the due date. You're going to have your primary cards, and then you're going to have your secondary cards. So the primary cards and then the due dates will be there, and then you're going to have the secondary cards. The secondary cards are going to be used to liquidate when the time's right to pay back those primary cards. So if you have $1 million between, say, 10 different fintechs available to you, some will be more than others on that, but say you have 10 fintechs, you got $1 million available to you. So I wouldn't use more than like 400,000, 450,000. And this isn't a long-term solution, but this is a way that you can avoid paying crazy fees, doing merchant cash advances, and depends what type of business you're in too. I have one student that literally liquidated 3 different fintechs to buy an auction house property. He literally just had to do cosmetic issues with it, paint, some flooring work, stuff like that. But he got it and he was able to sell it 10% under market value, literally flipped it in a matter of 3 weeks, walked away with like 65,000 profit. So when you're in situations like that, it's like you can use these credit lines to help your business expand. And if you use it right and don't abuse it and do it strategically and don't put all your eggs in one basket, the sky's the limit on what it can actually do for you. I've literally had students take from being pre-revenue or very little revenue, and they're doing Lyft or Uber, and they have only, say, 5,000 to their name, and they have no business credit or very little. Fast forward a couple months, then they have 6 figures available to them. And I'm not saying credit lines, stupid ones like the certain starter vendors. Some of these starter vendors are scammers too. They don't even report. Excuse me. All right, so this is another one, Flex. So Flex actually will give you up to 60 days to pay. All right. Now the Flex card though, when you go to apply, you need to actually know what to put in the application, because see that it says up here, the qualification. And I'm not going to go through this right here, but basically they're going to ask you questionnaire questions, and the questions are based on if they're going to accept your application. So they'll let you fill out the whole application, and then you'll get an instant, we're not a good fit or something. And that's just because one thing you selected in there. And that's like, how much do you anticipate to spend per month? So they'll have like brackets from, say, 1,000 to 10,000 a month, 10 to 20,000, 20 to 50,000, 50,000 to 100,000. Flex doesn't want to deal with people that are not going to spend much. So if you would have selected, say, 1,000 to 10,000, they'll let you do the whole application, but when you hit submit, it's going to a dead email address, like it's dead, like no one's reviewing your application. It's instant denial. They're not even going to look at anything, period. They don't want to service that account. So some fintechs, like Divvy, they'll service accounts with a $500 limit or a $1,000 limit. But Flex wants 25,000 or higher that you're willing to spend per month on the credit line. Because again, they make money based on you using the card and the interchange fee. That's how they make money. That's why they don't charge any fees, because they make money off that, the MasterCard or the Visa interchange fee. So they're making like 1 to 1.5%. So the Flex is like 241,000. I have a couple students, Flex is fairly new, but I have a couple students that I don't believe 200,000 yet. I think the highest is 180,000. One student I have, and one seasonal client that got approved for 120. But I've yet to see anybody get the Flex card low limits. Like, it's going to be at least a minimum of 20,000 from what I've actually personally seen. So not all fintechs are good for everybody. Some are more favorable towards pre-revenue or little revenue. And then there's other ones like Row and Ramp. They like to deal with those that are going to be willing to spend 25, 50, or 100,000 per month. So again, that's why in the mentorship, I go through this based on when I do the whole audit on your business credit, and we do the phone consultation. We get everything kind of planned out. I have you get the foundation, what you're lacking, what your more immediate goals are, and your short and long-term goals. And then based on that, I'm going to assign you weekly those tasks and which ones to apply and how to apply for them. And some of them I will actually walk you through a screen share, and I'll walk you through what to put in certain fields to increase your chances of approval, not trigger a denial. And I'm friends with some of the underwriters, one of the co-founders of Ramp. I've interviewed a lot of them here on the channel, the co-founders, Alex Bean of Divvy, Matt Robinson over at Ramp. So some of my students, they've got denials, and then this doesn't work always, but if you get, say, a denial and you're one of my students, I can go and contact who I know at that underwriter. I'm not saying all of them, but most of them I have relationships with, right? So I'll be like, hey, this is my student. Can you do a reconsideration? And I would say about 50% of the time that does work, where they'll turn a denial into approval, but maybe just lower limits, and instead of 30-day terms, 14-day terms, or instead of 60-day terms, 30-day terms. So the next one too is Float. This is also a fairly new one, Canadian based. Now they are also in the US. So they have high limits as well. And I'm not going to go over every detail of each one because there's just too many. So you have Float, then you have Row. This one, like, you could sign up for it. It's like they give you your own bank account and savings account, and then you can apply for their line of credit. I have accounts with them. I have multiple accounts with them. With Row, it's a unique, think of it like a whole bank account like system. All these other ones, they're expense management platforms, but Row is more like a bank account with a credit line. So you have your own ACH number, your bank account, you got money coming in, wire, invoice, everything. It's a whole platform. But they do want to only approve people that are being willing to spend a lot. So typically 25 to 50,000 a month, they're going to want you to like be willing to use if they give you the credit line. So some of these are made for those that have a lot of revenue coming in. So I wouldn't suggest anybody that doesn't have at least over 10,000 a month coming in gross deposits consistently for 90 days to apply for Row. But like Row, you don't want to just go apply for, because I very close with one of the co-founders, Olivia. And if you just go to row.com, you can see there's no offer. They're not giving you anything. But if I log into my Row account, I can send you an invite, and then you're going to get $500 statement credit. They give that to you after 30 days of using their account. Okay, so Row's one, they will give you very high limits. Typically 75 to 150% of what's in your business bank account. Next is Finally. This is also another fairly new one, but almost every student that I've had in the last couple months apply for Finally, they're getting approved. And they're similar to like Divvy, but their limits are all over the place. So I had one student get approved for $1,000 last week. And then Monday, I had another student get approved for 188,000, I believe it was. It's going to depend also what's on your banking activity. This one I don't even have yet because it's brand new. They've been around a very short amount of time. But you can see it's very basic. It's more so similar to what you're going to see if you have Row or Divvy. Very similar to that. But you can see they say quick approvals. They weren't. They got backlogged because the last video I did, so many applications came through. But now I think they're caught up. But it's no personal guarantee. They don't even check your credit. The only thing they do check is they check your LexisNexis. So that's just going to confirm, and that's required by federal law, the Patriot Act. So they're just going to check your LexisNexis. So you need to have a driver's license or state ID, obviously, but that's basically what they're checking against. Just here, you can see, and let's see here. So I can see the corporate record and who, say, the founder or CEO is, possible links as well. If anybody's been involved in bankruptcies or a family member. So it's like family linkage, things like that. So I look at all this when I'm doing the audit. If you're one of my students and I approve you to join the mentorship, I look at all this because based on all this data tells me what I can have you apply for. I'm not going to have you go apply for something that is like pointless to apply for because they see something and they don't. All fintechs, yes, they will all look at your business bank account. Not all, but I would say like 95%. That's what it's based on. But you could have $1 million in your business bank account and still get denied because of something on your LexisNexis legal research or your credit safe or your Experian. There could be something there and that's not passing the KYB, know your business, know your client KYC process. So all this I look at, and I've rarely had any student come to me, even the ones that say, oh, I have great business credit, everything's all great. Those are usually ones that I find so many issues that I need to fix. But they wonder why they keep on getting denied, and that's because they're not in the LexisNexis data. So you need to go on ZoomInfo, Crunchbase, get citations, these citations like DataXL, all this is shared. Even opening up a PayPal business account, I'm not saying get a credit with them, just opening up a PayPal business account, putting in your tax ID, all that, confirming the account, that they send and share that data directly with LexisNexis Legal Research. So you want several institutions and citation sites that are sharing to LexisNexis, the more the better, because that's further solidifying that, hey, this company is low risk because LexisNexis has, say, 37 different submissions that came in from, say, DataX or Yellow Pages or Better Business Bureau. A lot of people don't realize, but all this is shared. Like just opening up a Better Business Bureau, get listed on Better Business Bureau or Yelp. These companies actually share that data to LexisNexis. So there's an internal score with LexisNexis. You want to have high internal score with LexisNexis. Reason why is because the fintechs rely, because it's all no PG, they're relying 100% basically on one, your banking data, and then their cross-reference checks is they check either credit safe or the LexisNexis legal research. That's how they can determine if you're like high risk. So if everything looks too good to be true and they're running their underwriting checks and everything's too perfect, but then on LexisNexis there's only like 3 indication records, you're going to get denied. Even if you got $1 million and been in business, but you never open things up. So it's not always just about credit. You want to try to show some type of footprint. So LexisNexis has, I almost want to call it like inquiries, but like I said, opening up yellowpages.com, YP account, they're all free to do. Better Business Bureau. A lot of these all share the data with LexisNexis, and it's all signal data, and that's how you get approved for these fintechs. If you have strong internal score with LexisNexis, but then you don't have a whole lot of revenue coming in on, say, the business side, you can still get approved for Safe Finally or a Divvy bill, because they are 2 fintechs that I know heavily rely on LexisNexis legal research. Same with Expensify. Expensify almost does not underwrite manually almost at all. Like literally you connect everything and you can have approval in 20 minutes. Oh, you approved $165,000. And that's because they actually do a lot of the underwriting. It's based on, like, so they use a lot of AI. So they're checking with all these different APIs. And as long as those checks are, and you got files with LexisNexis legal research, and say credit safe is not showing anything bad on family linkage or any of the indicators, they're going to instantly approve you and there's no manual underwriting. But then if there's not enough record or something's not right on the legal research, or say even the possible links, you can see here there's possible links. You can see how it says all cash transactions. That's when Expensify's team will actually manually look at your file and be like, okay, we need a letter from your bank or this or that, or so it gets quite complex. That's why there's that people join the mentorship, because they kept getting denied. They don't know why they're getting denied, but they have everything. Their credit's good, their business credit's good, but then they still keep on getting denied. And I can usually find out when I do the audit. I can start to put the pieces together. Oh, this is exactly why this fintech approved you, but then this fintech won't approve you. So there is like a science to it, but I don't want to bore you guys with that. But anyways, back to the fintech. So there, finally is a good one. I'm actually going to have one of the founders, there's several founders, but I'm going to have one of the founders on in December, talk more about this. But it's definitely one good one that I would recommend. Then, like I said, there's Fuelman. If you're going to apply for Fuelman, make sure that you don't just put down that you have one car and or one vehicle and that's it, because you're going to get denied. You need to know what to put in the fields. And I'm not going to publicly say what to put in, because some of these underwriters do watch my videos. Okay, then there's Jeeves. Jeeves is a good one. They've been around since like COVID. Yeah, so here's my Jeeves card. Jeeves gave credit lines. They have quite a few different products, but they actually stopped offering lines of credit about almost 2 years ago, but it's all no PG. But now they now offer the credit lines again. So they paused it because they were changing their underwriting and their card issuer. So you can see now they're MasterCard, but then my card's a Visa. That's because they changed their banking partner. So there's no annual fees, and you can actually get up to 5% annual return on balances. They have a bank account you can actually have with them as well, like a fintech bank account. But they actually, you can see 1% cash back. So if you liquidate the card, typically it's 2.9%. So in reality, it's only 1.9% that your fee is going to be if you choose to liquidate it. You don't have to liquidate it. You could just go and use it for a big purchase and then not have to pay any fee on it, and then you'll get that cash back. But if you're trying to liquidate these fintech cards, pull liquid capital, then there's going to be fees involved, and that's going to be anywhere from 2% to 3%, sometimes as high as 4%. But still a lot cheaper than revolving a Chase card, and even if you have good rate, like 7%, it's still more expensive. This method is way cheaper than doing any type of merchant cash advance. Even a simple bank loan, if you have great credit and you get one through Chase or Bank of America, you're typically still going to be paying like 7 to 12%. It's just the way it is, even if you have a very perfect credit and everything. But back to Jeeves, they, like I said, offer credit limits now. They didn't before. I mean, they did, but then, like I said, they paused it. But Jeeves is good because actually, I'll tell you what, when I first applied for Jeeves, you guys know I started the YouTube channel with $5,000 I put in the business bank account from my own personal money. I sold one of my other companies back in 2017 and was able to semi-retire. The personal credit repair company got acquired. So I started the YouTube channel back in 2019 by mistake, just something I got into, and now I love teaching. But when I first got, Jeeves was actually one of my very first approvals with fintech. My very first was Divvy. Divvy gave me $150,000, and I only had like $8,000 in the business bank account that time. Divvy doesn't do that now. They've tightened way up. They don't give 1,000% of what's in your bank account anymore. They've tightened up. But Jeeves does give their pretty, they're not greedy, say Capital One or whatever. They're not greedy with their limits. So just to give you an example, I had 5 or 6,000 when I applied for Jeeves. I might have even like 8,000. But they approved me for 31,000 right out of the gate. Now I have very high limit with a lot of these. I don't use very much. I just keep them active because then when I go back to the States, I'm going to get into heavily a lot of real estate investing, and I'm going to put all these cards to use for me, obviously. But they do give higher limits compared to, say, Divvy or some of these other fintechs. So there are certain fintechs that are going to give you only 50% of what's in your business bank account. Some will give 75%, but it's pretty rare to get more than 100%. There is some that do 100%, but like Jeeves, they can give you up to 150%. And there's a couple that do just like that will give 100, 150,000, I mean 100 to 150% of what's in your business bank account. But the whole point of all this is you don't need to have a high amount in your business checking account when you first apply. You use one, liquidate that, put that from one account, and you move it properly, strategically, into the other account, your main account. So then now you got a higher account balance in there. You just let it sit, don't use it. And that's if you want to do this strategically. You time everything, the applications, properly too. You don't want to go and apply for all these right away and then you'll get only 5,000 for each one. Then it's going to be harder to get limit increases in the future. It's much better to apply, say, for one or two, get approved initially for those, liquidate those, put that into that account, move it around strategically, then go and apply for the third one once you have that higher balance there, or that's showing in your checking account balance. Like I said, Expensify doesn't care really about your history or anything. They only care mainly as long as you pass their preliminary checks. It's all AI based, so they literally base almost everything on your credit limits based on what's in your business checking account. It's pretty straightforward with them. Their underwriting's like the easiest. So I wouldn't have somebody go and apply for Expensify if your end goal is trying to get 100,000. No, there's other fintechs that we can go after first, and you get those, start stacking them, and then you go and apply for, say, Ramp, Expensify, Corpay and stuff. So Corpay will actually give you over 100,000, but you do have to personally guarantee that if it's over 100,000. But if the limit's under 100,000, then you don't have to personally guarantee. But almost all of these are all no PG, and most won't even check your credit. If they do check your credit, it's a soft pull. All right, then you have Toolbox. So there's another one. So before Toolbox, I was the first that launched them as well. Toolbox before, they were niche based, so they would only approve like interior designers, construction, builders. You had to be in that industry. Now they actually offer credit line any type of business. It's still geared towards construction and then contractors, but they have opened it up to just anybody now, any type of business, I should say. That's the CEO. That's one of the founders, actually. Will, I was just trying to see because they actually just did a redesign on their website. So again, you'll start to see a lot of these they look the same, like their platform. Let me see if I can show you. Okay, see how finally is? All right, and then look how Toolbox is. You know why? Because they're using the same framework. So there's like Marqeta, Unico, and Stripe that basically provide the banking partner relationship. But almost all these use either Marqeta or Unico. Ramp uses Unico. Expensify uses Marqeta. Again, this is stuff you guys, I'm technical, so I know these things, but it's stuff you guys don't need to know about the software and stuff that they use. Sorry, it's my ADHD. Okay, so there's toolbox there, and they give high limits, but again, almost all these fintechs, it's going to it's going to be based on different factors on depending on what fintech it is. I can't believe I've already been live over 1 hour. I have to get off here in a minute because I have another consultation. And anybody that wants to do a phone consultation tonight, it's early here. It's only 10 or 11:30 in the morning here in the Philippines, but I'll be doing phone consultations until about 2 a.m. Eastern Standard Time. That's when I gotta go pick up my daughter for school. But so here's another one, fairly new, FinFair. They took about 2 weeks to get approvals, but again, I think it's because they got bombarded by too many applications at once. They also will give up to 90 days, so it's 30, 60, or 90, but they typically are going to start you off at 30 days. So you can see here, business charge cards with monthly credit. So again, this is where it's going to depend on when they do the underwriting. They may offer you where you can revolve a certain percentage of it too. So then, again, expense management, including with charge cards. So why that's important, you guys, is that means that you can actually liquidate it without doing things strategically. You could just basically use their expense management platform and then use their charge card to pull the money off of it without having to go and use Plastique or one of the bill pay services. It's more internal. Okay. Again, I'll go over this all with my mentorship students. They understand it, but I don't throw it all to them all at one time. That's why the mentorship's minimum of 12, 16, 26, and 52 weeks, because I will break it down. I don't want it going in one ear, out the other ear. I want you to actually learn. So that's why it's like typically an hour to an hour and a half of your time per week in the client portal. And I assign 5 to 7 tasks. I don't want to throw too much at you. I want you to do everything the right way. So then by, say, week 6 or week 7, you may be like, Josh, I didn't know why you had me do this on week 1 or week 2. But then you'll come to me, say, week 7 or week 8 and be like, I gotcha. Now I know why you had me do that. It just starts to connect and you start to click things. Because if I throw it too much at you at once, it's going to go in on one ear, out the other ear. I've studied all this down to I don't think there's anybody in the world that knows as much as I do when it comes to how these platforms, underwriters work, because I actually look at the code as well. And it helps when you have code experience and IT experience, but I taught myself how to code back in like 1996, Visual Basic, C++, and PHP and HTML. So when I do applications, I'm also doing right-click view source. I'll go and look here. Again, I'm nerding out now, but basically on the application, let's see here. I'll try to give you guys a good example. Let me see here. Get started, I say toolbox. Okay. So again, like this is, they're going to want to try to see if you had qualified. They don't want to deal with people that are, say, too small or whatever. But this is powered by Typeform. It's not very good, but this is example. I can kind of see where this is going. And anybody can do this. It's available to you. I want to give you guys a better example. But anyways, I view the source and encrypt the data, and then it kind of tells me who they're checking or their preliminary checks. And that's all under this code. But again, I just get off this topic because it's just me being a nerd. Okay, so again, there's FinFair, and then this is a new one as well. I actually just came across it, called Rippling. So they offer expense management, travel, and corporate cards, and bill pay. What's nice about it, they have the corporate card, and then they offer the bill pay. Again, any of these expense management platforms that offer bill pay, that's good because it's an easier way to do the liquidation methods strategically. So this is another one. You can see you're going to want to go to finance, and then you're going to get started there. Imagine if I broke down details of every single one. So I get off topic a little bit. But anyways, here's another one, Clear Card. Not to be confused with my client portal, that's Clear Credit, but this is a Clear Card. That's this card. So they also offer a line of credit. They favor more churches, educators, and nonprofits, but they do offer credit lines to businesses. But Adam is one of the co-founders, along with ex-U.S. congressman, founded this. And I've had him on the channel many times. You guys could go back. It's probably one of my most viral videos is a clear card video from several years ago. But I've interviewed Adam like 5 or 6 times. But they do offer a line of credit. So again, nothing more to say on that because all these fintechs, they offer lines of credit. But I guess the point I'm trying to make is there's a dozen of them here that I've went over, or more than a dozen. But if you do things strategically, do it right, you could probably get approved for 80% of them. And you use them the right way, you can get millions of dollars. Like I said, I have over, if I don't even count my personally guaranteed American Express lines, like my black card, it's no preset spending limit. I could probably go swipe $1 million on it. Between these and then the other fintech ones, it's well over 3 million, probably more 8 million if you count with American Express. But I don't advise anybody to do what I did. I was the guinea pig. I don't advise anybody to go get like 100 cards. It's like you need a full-time employee just to keep track of everything. But if you get a solid, say, 10 to 30 cards, that's fine. It's easy to keep track of. So anyways, I'm going to end this live here in a moment. I just want to let you guys know, anybody is interested in my one-on-one business credit mentorship, this is new. I just tried it. I don't know if it works, but there's a QR code. You can scan that. It should take you to this form, I believe. I am offering 30% off my one-on-one business credit mentorship. However, I don't approve everybody. I get about 10, 15 people a day texting me for a phone consultation. If you make it to the point where my assistant books a call with me, right, I can tell you honestly, I only end up accepting about 5 or 10% of the people that I actually talk to because the goals have to be aligned. And some people I can just tell they're scammers or they're looking just to screw over the underwriters. I'm friends with some of the underwriters. I don't want to send illegitimate or scammers or people up to no good looking just to get free money, basically. I don't want to send people like that to underwriters, my friends or not. I don't want to send them. It looks bad on me, for one. And so I have to make sure that, one, your intentions are right. And also, don't contact me if you just want to get, oh, I need 100,000. I got to pay some bills or something. I literally get people like that. Oh, my car's going to get repoed. Can you get me like 10,000 real quick or something? Pay my rent. No, please don't waste my time. If you want to build up business credit and you don't want to do the mentorship, it's fine. No pressure on that. Like I said, I don't accept everybody, but go through my old videos and do those steps, okay? If you can't afford the mentorship, no problem. Soon I'm going to be dropping an actual course for those that say can't afford the mentorship. A course that's what I should show here. So this is like the client portal for the new course. And there's live support. That's me and my office manager and one of my VAs. There's actual videos that's not on the YouTube channel that are going to be in here. And then my other client portals here. This is for like my one-on-one business credit mentorship. This is a demo account, but these are like tasks that I assign on what you need to do. You're not going to see all these. This is just a demo account. But that's another one we didn't go over, the Parker card. So there's another card that's more geared toward e-commerce or you're selling online. So they get very high limits as well. There's probably 5 or 6 other fintechs I'm forgetting about. But anyways, this is the client portal. Everything is going to be merged over to the businesscredit.cc. I own that domain, and getbusinesscredit.com. But basically, everything's going to be integrated very soon. for the business credit course, the resources, and the one-on-one business credit mentorship. And we have Android and iOS app as well. So you can download that very soon if you just do the course or the one-on-one business credit mentorship. However, you have to qualify and be approved for the one-on-one business credit mentorship because I don't have any negative reviews. I've had over 400 students. I don't take on more than 60 students at one time, and I want to keep it that way. I'm not going to just take on somebody just because you can pay me. Trust me, I turn down people all the time. They want to pay me, but I'll turn them down because either their attitude or I feel they wouldn't be a good fit based on what their goals are. If you're just looking for quick cash and you're not interested in learning, don't contact me. Please don't waste my time or anything. The number below there, or where's it at there? 937-423-9954. That is my real T-Mobile cell phone, okay? So please don't call it because I don't answer their calls. I could be, just respect that it's my personal cell phone, but text me there and I will respond directly. I do offer free phone consultations. That's the first step to see if that you would be a good fit or not for my one-on-one business credit mentorship. But even if I say, okay, we do a consultation and I don't feel like you're a good fit, I'm still going to give you free advice on what to do. I'll take the time and give you some free advice. That happens all the time. Quite a few people are like, hey, I just don't feel you're ready. Maybe in a couple months you come back to and possibly join my mentorship. But right now, this is what I'll tell you to do. Get Fair Figure, NAB, eCredible, CEO Creative, Coast to Coast. Do these things first, just to get you a little bit of established, to get that initial profile. Again, forget about business credit scores. Focus more so on building up the foundation. Okay, so I give the free advice out all the time. Just sorry that I ramble. When this new client portal drops, everything's going to be like really cool. That's all I can say. I'm debating to even have a free section where people can sign up. It's 100% free, but just limited resources or so. Because for some reason, YouTube doesn't push out to, I have 40,000 subscribers. YouTube is not good when it comes to alerting people. So that's why you guys give the video a thumbs up, please. Anybody that did like this information, please give the video a thumbs up. That really helps the algorithm and everything. Anybody has interest in my one-on-one business credit mentorship, or if you want any of these links, the private links of these, because some of them will get you either a quicker application to my rep, or not all of them, but there's 4 of them that will get you either $100 or $200 or a $500 statement credit if you sign up using my link. And plus it helps support the channel. But you can just email me, support@joshvanhorn.com, if you want those particular links. But if you're interested in a free phone consultation or the mentorship, I think you can do that QR code thing there to fill out the form. But it's best just to text me. This was only supposed to be a 15-minute live, so feel free to text me, and we can do a consultation in the next couple hours if you're still awake, or we can schedule it for tomorrow, but at least just text me. And watch the replay, but I'm going to try to start releasing videos more like this, more structured, and more often again. That's why you guys only saw a couple of videos a month from me before. Now dropping more frequently and going live more frequently now I got my studio set up. If anybody of you guys that are listening, you're one of my students, I'm sure there's some of my students here, but go in the portal. I assign new tasks to everybody, but for some reason, some students are saying like they don't get notification, and that's because you need to check your settings on the portal. You go under your profile and enable that you want to be emailed or text the alerts. Like, I don't want to assign all the tasks and then you just keep on getting bombarded. Josh signed you a new task, or I commented or something. Like, you're going to get sick of those notifications. I know I hate notifications that come in like crazy. If you are one of my students, log in and check and go under the tasks and the Talk with Josh communication tab. Let me show. Yeah, so chat with Josh, make sure you click on that because that's where you're gonna see like the email conversations that we have. But you definitely want to do it strategically. That's why maybe I should have started the video this way, but again, this video is more so about the mentorship part. But don't blindly go and apply for these fintechs. You can, but you're gonna have much better luck if you do things strategically. And that doesn't mean you have to join the mentorship. You could just shoot me an email and ask me a couple questions. I'll tell you what to do. At least give you a few tips. And you guys, I have now almost 24/7 support. So if you can't reach me, you can always, Jason, my little brother, he's available pretty much like 9 a.m. until about 9 p.m. Eastern Standard Time. So for any of those, say, past students or past people that contacted me and say it's hard to reach me, I didn't have a support that I have now. I actually have in-house staff aside from my little brother Jason. Jason's my office manager. But now I actually have a support team, so everything a lot easier to handle everything. It's much more organized. That's why you see like my studio here. It's I do music too, you guys, but yeah. I'm a music producer, but that's another topic. Even if it's late night for you, you can still text me. Some people work late night, so you're not going to disturb me at all. And regardless, if you text me, if I don't text back right away, I'll text back probably within a couple hours. But thanks for tuning in. Make sure you guys subscribe, please. I'm like stuck right. I'm like only 100 away from hitting 40,000. Be nice to hit that. But if you guys can please give the video a thumbs up, subscribe if you're not already a subscriber. But when you subscribe, make sure you click the all notifications so you get alerted when I do these lives. But anyways, you guys text me too if you are interested, 937-423-9954. It is my personal cell phone. And expect some new videos being dropped tomorrow. Okay, you guys take care.